Hey, what's going on, guys? Today we're going to talk about another options trading strategy that I'm a big fan of, and I think for certain situations, it can be a great strategy to use, and it's definitely a great skill set to have and to know how to use when certain opportunities come up. So let's go ahead and dive into it here. So, like I mentioned, it's an option strategy that I am a big fan of. The first, requirement is that it is you have to have a margin account. That's just kind of the idea with that. We'll talk about that here in a little bit. You're also going to have level 2 option access. So definitely check with your broker. Pretty much everyone starts at level 1 once you get approved for options, and then you kind of have to go up from there. And each level is a little bit more advanced. Next one on the list. So this strategy is implementing a defined risk strategy, right? So we'll get into it here in a second. So it's defined risk, but please always close before expiration, at least your short leg, because your defined risk can be much higher than expected. And then lastly, this strategy can be good for smaller accounts that can't sell regular cash secured puts. So if you're familiar with what a cash secured put is, if you sell it on Tesla right now, you're going to have to put up roughly, $25,000 if it's trading at 250, just in order to sell a cash secured put. So that's kind of the idea there. And then lastly, this is a theta gang strategy. So theta is something that pretty much composes the value of option contracts, and it's pretty much how much every single day that option kind of decays. So that's the theta, and this strategy is that. So what is this strategy? So this strategy is called put credit spreads. So it's involving two option legs. So typically, I'm sure many of you are aware of what a cash secured put is, right? So the example I talked about earlier, let's assume Tesla. Tesla's had a pretty good week. Let's assume that Tesla's currently trading for I don't know why. Here we go. Tesla is currently trading for $250 per share, and you want to sell a cash secured put at say 240, right? So 240 put. It's going to take $24,000 in order to sell that position, right? And pretty much what you're doing is you're setting a limit order. So you'll get paid some premium. So really your basis may be, maybe like 23.7K or something. You may get like $300 in premium for selling that, whatever it may be. But essentially you're setting a limit order to buy Tesla at that strike, or at that strike and that particular price. So that is a cash secured put. The problem with that is, different traders or really, your risk is, it can be pretty significant, right? So like if Tesla, just a couple months ago, if Tesla drops by 10-20%, you're getting assigned at like roughly 238. But what if Tesla shoots down to, I don't know why this is so but what if Tesla shoots down 20 points, right? So now you're looking at like 220 for Tesla. So bottom line, right? You have much more risk. You don't have defined risk with cash secured puts. You're putting up $25,000, and if Tesla pulls back, if Tesla pulls back 20-30%, you're gonna have to absorb all of that there. So just kind of hope that makes sense. And with put credit spreads, we'll talk about it here in a second. But sorry, I'm trying to get used to this website. Let me know if you guys like it down below, if you like the illustrations that, we're kind of going over here today. For some reason, I can't seem to delete what has been created here. But back to our example, right? So the difference in, selling a cash secured put versus a put credit spread, you're also buying an additional leg. So put credit spreads, like I talked about, have two legs, right? Compared to the one option, cash secured put, you also have 2 legs. So what that does, it defines your risk, right? So the width of your spread, whatever it may be, it can be as small as $1.50, or it can be as, the wider you make it, the more it kind of behaves kind of like a cash secured put would. So I'll show you an example here, over here on the right. So let's say we wanted to use the same example. We wanted to sell that 240 put on Tesla. But the thing about the put credit spread, we can also purchase a 220 put. So this is going to be like 1, and we're going to be actually selling 1. So you can see, so the collateral required for this is no longer $24,000. It's going to be $2,000. And then the premium collected, for example, say you collected $300 for this. So 3.00, and I don't know, say this is like 1.50. So you're not going to be able to collect that full $3 in premium. It'll be negated by the cost of this option. So you'll get 150. So you'll be you'll be assuming the risk and having the possibility of making, obviously nothing's guaranteed in the stock market, but you'll be have the potential to make, 150 on $2,000. Let me calculate that real quick and just kind of see. So it's a 7.5% return possibility. So you'll be making roughly 150 on $2,000 of risk. Equates to 7.5%. So that's much more attractive than selling cash secured puts. However, you have to understand the risk. You're compared to just getting assigned at 240. If it blows past, both of these, or if it, ends up somewhere in between these strikes, you have the potential to lose, lose your 100% of your collateral. So that's the difference, and that's the more riskier part of put credit spreads. So next, I kind of want to hop over to Fidelity. Once again, I also whited out the screen here, some of my personal information, but let's zoom in a little bit so you guys can see this. So this is on Fidelity's platform. Personally, I got to get off of their platform for trading options. It's horrendous, especially on the mobile app. I've been having such a terrible time with their platform, and it's so frustrating. Let me know what your favorite options trading platform is out there. I love it for long-term positions, but trading options is just, I want to bang my head against the wall because they are just so behind, and it's just very frustrating at various times. But if you are on Fidelity platform, this is going to be a good example for you. You have to have tier 2, and then what you'll do is you'll click on spread here, and you'll see that adds another row. So what we'll be doing, let's just do the same example we had earlier. So Tesla's currently trading for 260. Like I talked about, it's had a great week. Let's just do one contract for the sake, and then we'll just do May 16th. There's all kinds of different strategies with that, selecting expirations and selecting strikes, and you have to make sure you're doing your technical analysis, and There's a lot that goes into this, and there's different strategies, and not going to do a deep dive on that today, but just kind of want to, high level kind of go over the structure of this type of strategy. Let's go to, I don't know how much premium we'll have in here, 240 by 245. Or we can do 250, that's fine. Okay. So here's another example, right? Like we talked about, we are selling a cash secured put of 250, and then instead of putting up that collateral required, we're offsetting it by also purchasing the 240, roughly risking $1,000 to make 350. You can see our max gain is the premium that we collect up front, and then the max loss is actually 650 because that is the difference between these two strikes here. So this is $1,000 minus 350. That kind of gives us our max gain, and then our max loss is just the difference between those two. So hope that's helpful. Definitely go do more research for sure. Make sure you kind of understand it. There's tons of platforms out there. I know Thinkorswim, I think there are now Charles Schwab, but they offer paper trading, and a lot of different platforms out there allow paper trading. So this could be something you can go test out and make sure you understand exactly the trading strategy that you're trying to implement. Do keep in mind, you should be getting a net credit, right? We're selling premium here, hashtag Theta Gang. So that's the idea. So make sure this says net credit, and then go for it. Make sure it's a trade type of margin as well. And then so you also see the break even here is 246.50, and that's just accounting for the premium. However, if you come to expiration, if you come to May 16th, the day of, do not let this go to expiration. Purchase it or roll it before expiration. I repeat, do not let your option spreads go through expiration. A lot of brokers will close them for you, but don't forget about your spreads. The worst thing that can happen is not only losing 650, but you can get assigned shares potentially, right? So like if Tesla's at 260 right at the close, but then it drops to 245, so it's right in between your two strikes, your short put gets assigned, and then your insurance, you have no insurance at that point, right? Because you can't exercise it. It's not in the money. So needless to say, it can be a very dangerous situation if you don't have the cash to sell this cash secured put. You can get immediately put in a margin call, and it would just be not a good situation. So close your spreads before expiration. Okay. Lastly, I want to go over to this website. They've definitely made a lot of improvements since I've used it over the past couple years. But this website, I'll put it in the link description down below. It's just thetagang.com. Really cool, right? So it looks like it is a community of traders logging their trades, just trying to learn from other people. Looks like it's completely free. Definitely go check out this platform. Definitely not a sponsor or anything, but this is great, right? You can learn from other people that are doing doing various trades, right? So I want to take a look at QQQ here. And what this, as you can see, right? Oh, let me see if you guys can see a little bit better. Bear with me. Okay. So as you can see, right? So I typed in QQQ. It's a very liquid ETF that people like to trade, especially options. But people are going through and showing you, hey, look, like I opened a call credit spread expiring April 23rd, which it's a couple of days ago at this point. But he's shown there's people out here that are logging their trades, and you can come out here and learn from their wins, learn from their losses. You could keep track of their trades if you don't want to take on the trades yourself. But you can see there's tons in here. Here's a put credit spread, right? So he entered. It shows you when he opened it, when he closed it, and so forth here. So he opened a put credit spread on QQQ, opened it on the 8th. Looks like it so he closed it on the 21st, and it didn't expire until May 9th. What were the strikes? So he sold a 370, 390. He sold 3 of them, and he made $444. So let's take a look at that. Yeah, so pretty cool though. It shows you when he opened it, shows the expiration date of this spread, shows it when he closed it, shows you how long he held it, or that might be how many days until expiration. Not sure about that field. Shows you how many spreads he took on, what price he got filled out, price it got closed, and the profit loss. He also put in here that he opened it at a 15 delta of a 31 DTE. So really cool. Very informative, very, very good data to analyze and, pretty much be able to come up with your own strategy that you want to implement. So I know this video is a little bit longer. If you guys are still here, definitely appreciate it. Definitely go check out the following resource that we talked about today. And if you got any value from it, please like and subscribe down below. Once again, not a financial advisor. Use this for educational purposes only. Use this for motivation to go teach yourself about this trading strategy. Yes, it has pros. Yes, it has cons. But, if you manage it correctly, if you're smart about it, if you don't over leverage yourself, I think it could be a great way to, generate income from your portfolio. And that's exactly what it is. It is a premium option strategy, trading strategy, and that is the put credit spread. So once again, guys, thanks for sticking around, and stay tuned for more content coming soon. Cheers.